such a massive rally in small caps yesterday? Was it a reevaluation of what the Fed decision really meant for the U.S. economy?
I mean, yeah, that's the boost, right? The Fed has started cutting interest rates, and the market believes that the Fed's going to keep on cutting interest rates as well. A whole series of lower rates is great news for equity markets. It should pump up the economy. It should therefore inflate the future earnings, not only of the Magnificent Seven, but of all equities. So there's that opportunity for you to spread risk further and wider. And it's not just those four equity gauges that were hitting those record highs either. You look at credit spreads, the tightest since 1998 at the same time. And of course, the All Country World Index at a record high too. So, really those gains spitting out from the US tech market right the way through the rest of the equity market structure.
But it seems, Paul, that this rally globally has been interrupted somewhat rudely by the Bank of Japan. What is it that's interrupting this specifically? What are investors focused on?
Yeah, well, apart from the fact that, we've got this big long run and maybe it's time for a pause, the BOJ did throw a little bit of a spanner in the works with two quite interesting shifts in the way that it's doing its policy. First of all, it said that it's going to start selling some of the ETFs that it acquired during its QE phase. Not huge enough on its own for it to have a big market impact, but it's more that signaling effect that's important here. The idea that it wants to tighten policy, wants to, do a little bit more QT. And so that gave the equity market something of a setback. The market is at a record high, so the BOJ is, one, turning a profit on it, and two, not causing a huge sell-off from already low levels or anything like that. But two, and I think more importantly here, there were a couple of dissents. The BOJ did hold its policy rate, but a couple of dissents who said, why don't we get on with hikes now? We want to raise interest rates. We don't want to wait any longer. We could do it. Japan has some elections coming up, and that's going to be a little bit of a distraction. And maybe they were thinking, let's get it done beforehand. The economy is strong enough to take this now. And that tips you to the idea that the BOJ is more likely to hike interest rates this year than next year. Again, negative for the equities market.
Paul, what's the main event today in Asia? Is it the BOJ or is it the Trump-Xi call?
I think that from a market's perspective, the Trump-Xi call should largely be a bit of irrelevance in terms of concrete outcomes. I think the signaling there, so long as it ends amicably, is plain for all to see. The relations are in a better position at the moment. And so that's encouraging for equities markets. Of course, Chinese markets in particular, in the stock side and in the AI side have been on a real tear recently. But actually, and not my area of expertise here, but the thing to watch may be the commodity space and particularly soybeans. China hasn't bought any US soybeans so far this year or this season. Normally, it would be doing that. The market is rising in anticipation that just maybe there'll be some sort of accord that helps US farmers here.